Hey everybody, this is Jim at SP500chart.com coming to you on Saturday, April 21st, 2012. This is going to be our video where we look at what took place in the markets yesterday using the S&P 500 as our overall gauge of market analysis. And we're also going to take a look at the week, kind of see what calls worked and what calls didn't. But before we do it, got to remind you once again that SP500chart.com and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you got to make investment decisions that are suitable for your personal financial situation. I'll remind you again, even if you're thoroughly impressed with how we read charts at SP500chart.com, I'm still not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, the first thing we're going to take a look at here is an hourly chart, and I want to show you some things that I think are fairly important. And I've made a fairly major change to one aspect of this chart, and that is I have moved this line right here. And where did this line used to be? Well, I'll tell you what, we're going to leave it where it is. I'll just draw you where that line used to be. Back, I was looking at some of these bottoms down here because they all kind of lined up on a near perfectly horizontal level down in the 1340s. Okay? And I think it's safe maybe for us to leave that line there, but we're going to make it a very light gray because I don't think that's the most important thing that's going on right now in terms of support. I think what we really need to be keying in on, and there's a couple reasons for this, but I think what we really need to key on is this level and this level right here, adjusting then that line to be a possible neckline in a head and shoulders top. Now, I want to be very, well, I don't want to be honest with you. I think I am continually honest with you in that sometimes the markets show you two sides of a coin. They show you two things going on at the same time that don't always reconcile with each other in a nice and neat way. And we may be facing that kind of a situation coming up in the next weeks and months. And the reason I say that is, if this does work as a head and shoulders, then we are faced with the possibility of if it breaks down, if it breaks down early, let's put it that way, then we're faced with the possibility of looking at a test of this blue line that should actually go lower than this line. And what I mean is this. We've been looking at this blue line as something that would likely carry some technical significance. And what I mean is we had this line as defined by the 2007 S&P all-time high, which was a head and shoulders top. Then we had this head and shoulders top right here back in May of 2011. And we broke out over that top early this year, actually in February, or was it? Yeah, February. And now we've talked about how we've been feeling for a while that this line deserves a back test. Okay, we have not gotten it yet. I still feel that line deserves a back test. We've seen some patterns that have worked out very well. We had this inverse head and shoulders right here that propelled us up over that line as it should have, according to this pattern. But now you can see, if we look at let's go back to that hourly chart. You can see how this is starting to look like it may be a head and shoulders forming. And one of the reasons I say that is once we broke down out of this little triple top, and we made that call spot on, but once we broke down out of that pattern, you'll see this green line right here. That is an important line. It goes back all the way to the market bottom, the panic bottom, in early October of 2011. And you can see that no matter how you draw this line across any of these four bottoms, even though they don't line up exactly, there is no way you can draw that line of major support without that having been clearly taken out in early April when this triple top broke down. So now that we have the breakdown of this triple top and the breakdown of this line right here, there's where it took place, right there. We did this, we made a bear flag and then broke down heavier, came up, made a little bull flag. Now we've been going kind of sideways with an upwards bias. And guys, you know, I want to be wrong, okay? I really do want to be wrong, but I cannot see this as anything other than a bear flag having formed since that breakdown. Okay, I just can't see it any other way. And if we measure the height of this flag pattern, we end up with a level that when that breaks down, and I believe it will, but you know, I don't. Let me change my mind here. Let's not talk about certainties, okay? Let's keep it on the if basis, to where if this breaks down, as I would expect it to, then that move should take us underneath this line right here, which, I'll remind you, is the line of our potential head and shoulders top. And if that happens, then we got to measure our height of the pattern. We start looking at a target that, if it happens relatively soon, will take us underneath this expected line of support. Now, here's the deal. This little flag here could extend on out for a while. And let me show you one slight possibility. Okay, I've now gone to a 2-hour chart, which has kind of screwed up some of my lines, but it's the only way I can show you what I want you to see. Is that if we look at the distance that took place in the forming of this left shoulder right here, okay, that's about the distance in time, and if we extend that same distance to the forming of the right shoulder, then you can see that it is possible that the markets are going to go sideways for a while, break this line here, then come down for a back test of that blue line, which is the 2007-2011 head and shoulder tops line. So that would be really interesting, okay? But that's making a pretty extended call that I am not willing to either wager on or expect to happen. And I don't even want to sign my name on that projection. All I'm saying is that there is a way for this bear flag. Let's go back to my hourly chart so my lines are right. There is a way for this bear flag to behave as a bear flag, but it's got to extend on out for a while and then break down at some point, probably in, it would have to be late May, I think at earliest. And you know how we have been used to having these summer doldrums in the markets. Who knows? That may be just what happens. But you can see that that again we have some patterns that we have expectations from. Those expectations don't necessarily line up with the idea that this blue line down here would hold as support if this pattern breaks down soon. If it just lingers and we go sideways, like I said, for a while, then, as I mentioned, and wouldn't that be nice, that we just kind of go sideways, we kick around, we maybe go up a little higher, get up to 1400 again, maybe even get a solid, maybe even potentially a decent test on this neckline of this triple top pattern, okay, which still would not necessarily result in a breakout of this flag. You see there, if we extend this on out, we could work into this pattern a little bit longer, about the same length of time that we were over here. Then it could break down in such a way that the expected target from the head and shoulders, the minimum target, could be satisfied without taking out this blue line. Now, again, guys, that's a little that's expecting a lot of things to work out just right, and it involves so much time out in front of us that I feel like I've spent a long time explaining something that may not even happen. But all I'm saying is that is the only way for all of these things to work out as one would expect, as one would hope they would. Let's put it that way. All right, enough of that. Let's take a look at a 10-minute chart, and we're going to take a look at what took place over the past week. Well, the week started on the 16th, and frankly, I think that back on the 13th, which was Friday, we said this kind of looks right here like a bear flag, and we that bear flag did break down on Friday. We made that call, but on Monday we had some strength back into the pattern, and then all heck broke loose. Now, we did not really know enough about this larger bear flag to know what was going to happen on a breakdown of this pattern. We didn't know, for example, if we were going to come down for a full back test eventually of this broken channel line right here, which would have taken the markets down severely on the 16th. We didn't know. So we just, I think I said, you know, we've kind of, that's a possibility. We could see some support maybe in the 1360s. But also there's the possibility of working back for a back test of that neckline that still hasn't happened, and it looked like the market wanted to do that. And at the time, we had a resistance line drawn right here. So when the market, when the S&P got up over this line, gee, it was kind of like, wow, that's kind of odd. It doesn't seem right that we would come down, get slammed down so hard, and then just immediately come back and take this out, because it just seemed like we needed to have more work in this general high 1300s area. And when we made that move up out of there and closed over that on the 17th, I think I made mention of the fact that, look, we've closed over this line, but that really didn't look like a breakout. And thankfully, I didn't treat it as a breakout, and instead the S&P backs up and comes back down for a pretty weak day on the 19th, and then a little rally on the 20th, but can't quite muster the strength to get over the 1380s to get back up into this line. So we've had what? Let's lose this line because I've redrawn this bear flag. So we've had, starting at this bottom here, we've had 1, 2, 3, 4, 5 touches. And typically you have 6 touches in a flag, sometimes more. So let's see if we do get a bounce down here again and come up for one more touch. Or maybe go sideways for a while, maybe extend that into May. You can see, though, I'm not thinking that this is a bottom and that we're going to go up and we're going to set a new high. I'm thinking that we likely will come back down and make a test of some lower levels if and when this bear flag breaks to the downside, and assuming that it does that, if it does so in the next few weeks, then that should also put ample pressure to take out this neckline of what would then be a head and shoulders top, and then that should be setting the wheels in motion to come down and test this blue line down in the low 13, well, by then it will probably be in the 13 teens. Is there anything else that could happen? Absolutely. I don't pretend to get this right all the time. For example, there is a possibility that if we stay in this bear flag for a week and a half more or so, that a breakdown could still happen of this line, but we don't necessarily have to take out this neckline at that time. And that could be setting, in other words, we could still break out of this pattern, make the minimum target, but stay over the neckline in the S&P, and then that could be setting up maybe that extension on out to the right for a little bit. So there's a couple different things that could play out. As we look at the chart right now, what I would say is be cognizant of these lines right here. And I still think this is a bear flag. But along with that cognizance, we have resistance up here in the low 1400s. We will have some support down here at this neckline that should produce at least some kind of bounce, and that would be in the 1360s. And if that breaks, then we have to be looking for something down in the low 1300s. So look, that is the weekend update for the week ending April 20th, 2012. I know I got a little long-winded, but this is a very interesting situation that we're dealing with right now, and I wanted to as fully as possible explain what some of the potentials are as we go ahead. Now keep in mind, as we look ahead, there will likely be clarification along the way. Okay? You know that the markets have a tendency to kind of unfold. The evidence becomes more and more known just a bit at a time over time. So what we're talking about now as being highly speculative in a week or two may become much, much clearer. So therefore, stay in touch. Check out sp500chart.com on a regular basis. The weekend updates are free and also being published at rantfinance.com. And I blog over there, and that blog is a free thing. If you want to subscribe to sp500chart.com, the advantage to that is you get daily technical analysis videos released with no delay. They come to you after every trading day when I produce the video, with rare exceptions. There are times when, for technical reasons, a video may be late, and I had that happen this past week on Thursday. The other thing is there may be times when my personal travel, just makes it impossible to get one done. But I don't think I've missed a video, but maybe once or twice in the past 6 months, and my goal is to miss no more than 10 per year. And I really want to do much better than that. So hey, think about it. Check out the details at sp500chart.com.